All right, let's get right into it. Today, we are cracking open an absolutely fascinating data set. We're looking at the newly public 2026 stock market disclosures from some of the highest profile political figures in the country. Specifically, we're going to be digging into the Trump family's recently revealed trading list. We are going to decode exactly where all this capital is flowing, sector by sector, and see what it might tell us about broader economic momentum. So grab your notepads, because honestly, the sheer scale of these trades is incredibly revealing.
So, our source material drops this really provocative quote right off the bat, noting that, quote, "This is what people with the inside information are buying." Now, regardless of where you sit politically, when public figures with immense reach, access, and capital disclose their financial moves, well, the broader market definitely pays attention. Our goal in this explainer is to look strictly at the numbers, the companies, and the sectors. We're keeping things completely neutral here, just letting the data speak for itself to figure out what these trades might signal about the future.
Here is our roadmap for today. We're going to start with the overarching Trump stock shopping list, break down the multi-million-dollar bets versus the sub-million and smaller plays, take a quick look at other House members, and finally unpack the serious risks of copy trading.
Okay, Part 1, the Trump stock shopping list.
When you first pull up these 2026 disclosures, it is literally just a massive list of corporate names spread across a bunch of different sectors. The source explicitly names over 25 different companies. Now, just reading them off one by one doesn't really give us much insight, does it? To actually grasp the market implications here, we need to categorize this shopping list. By grouping these buys by the sheer size of the financial investment, we can see exactly where the heaviest conviction lies versus where they might just be, testing the waters.
Moving on to Part 2, the multi-million-dollar bets.
In the data, the source highlights what they call large positions. We're talking about buys ranging from $1 million all the way up to $5 million per asset. I really want you to think about the financial weight behind those specific trades. When a portfolio drops millions into a single equity, it signals a massive level of confidence in that company's future. These aren't just speculative gambles. These are the foundational pillars of a high net worth portfolio. Now, what's really interesting here is the intense, almost singular concentration in the technology and AI sectors at this massive dollar amount. We're seeing huge buys in hardware and chip giants like Nvidia, Broadcom, and Texas Instruments. And then that capital just flows right into software and cloud dominance. Microsoft, Oracle, ServiceNow, Adobe, Amazon, Apple, Dell, Motorola. It is practically a who's who of modern digital infrastructure. Comparatively, the other sectors are super sparse at this tier. You've got Exxon for traditional energy, alongside CB and some broad index funds. But the undeniable takeaway? The heaviest bets are placed squarely on the continued explosion of tech and AI.
All right, Part 3, sub-million and smaller plays.
Dropping down below that $1 million mark, things start to shift. While the semiconductor theme definitely continues with players like Micron, and AMD, the diversification really expands here. Capital starts spilling over into traditional high finance with Goldman Sachs, consumer apps like Airbnb and DoorDash, and even pivots into alternative energy with Bloom Energy. It shows a really structured strategy, anchor heavily in mega-cap tech, but use these sub-million-dollar spots to capture growth in everyday consumer behavior and green infrastructure.
Further down, the source lists what they simply call smaller positions, and these illustrate a distinct, arguably much riskier shift. They're throwing money into data and defense with Palantir. There's a highly volatile move into crypto proxies with MicroStrategy and Mara Holdings. We also see SanDisk, retail finance via Robinhood, and heavy industry represented by GE Aerospace and Boeing. This tier honestly reads a lot like a venture capital spread. They're placing strategic, smaller bets across really volatile, news-driven sectors where the upside could be huge, but the downside is just as steep.
Next up, Part 4, other House member trades.
It's not just one family making moves, right? Alongside the primary list, we see notable trades by other House members, picking up shares in IONQ, Mercado, BigBear.ai, and NextEra. And again, we're seeing that same macro trend. BigBear.ai and IONQ highlight this massive fascination with emerging AI and quantum computing. Mercado shows a bullish stance on international e-commerce, and NextEra reinforces a serious commitment to renewable energy. Across the political spectrum, the appetite for next-generation tech and energy seems incredibly unified.
Which brings us to Part 5, the copy trading dilemma.
So, looking at all this cash flying around, it begs a really critical question. Should you copy trade this list? When you see public figures making massive moves in Nvidia, aerospace, or crypto proxies, the temptation to just mirror those exact trades is incredibly high. It feels like a shortcut, right? But is that actually a smart move? Let's unpack the harsh realities of doing exactly that.
So, the crucial point is understanding the dangerous gap between perception and reality. On one hand, you have the allure of high-profile trades. Like our source said, there's this widespread assumption of inside information, and that creates a powerful psychological draw. But on the flip side, we have massive retail risk. Even the source explicitly states, this is not investment advice. The disconnect between seeing a disclosure today and making a trade in your own account can seriously wreck a retail portfolio.
Let's actually break down why mirroring these bets is so dangerous. First, consider the sectors: mega-cap tech, AI, crypto proxies. These are highly volatile. Prices swing wildly based on daily news. Second, and this is absolutely critical, these disclosures are not real-time. By the time a multi-million-dollar trade is made public, a significant amount of time has passed. The market has already absorbed it, the price has moved, and whatever inside edge might have existed is long gone. Finally, blind copying completely ignores your personal risk tolerance. A multimillionaire placing a fractional bet on a high-risk crypto holding has a massive safety net. The average retail investor, not so much.
And this brilliantly illustrates our main takeaway for today's explainer. Sector trends are highly informative, but blind copy trading carries immense risk. You should absolutely use this data to understand where macro-level momentum is heading. Seeing capital flow into AI, semiconductors, and green energy tells us a lot about long-term economic expectations from people with deep pockets. It's a fantastic compass, but treating it as a guaranteed shopping list for your own finances, that's a recipe for disaster.
Man, we've covered a lot of ground today, navigating from huge tech bets to surprising shifts into aerospace, green energy, and speculative crypto. Now I want to turn it over to you. Looking at this massive data dump of 2026 disclosures, which market sectors surprised you the most? Was it the heavy concentration in AI, the pivot to alternative energy, or maybe those venture-style crypto plays? Keep thinking critically about these trends. Always do your own research to understand the underlying logic, and I will catch you in our next explainer.